July 15th, 2015, Birmingham, Alabama, Federal Courthouse. Walt Scheller sits in the bankruptcy hearing, watching his empire crumble. Walter Energy, once worth $10 billion, is drowning in $3.15 billion of debt. Metallurgical coal prices have collapsed from $300 per ton to $81. The numbers don't lie. His company is finished. Outside the courthouse, 3,100 coal miners wait. Their pension gone, and their healthcare. Some have worked underground for 30 years. Now they have nothing. The media declares coal is dead. The industry is over. This isn't just a coal story, it's a lesson about how massive wealth is created after public failure. But Walt Scheller sees something everyone else missed. Something hidden in those same Alabama hills that destroyed him. 9 months later, he walks into a meeting room. Across the table sit the titans of private equity: Apollo Global, Blackstone, and KKR. He tells them, "Give me $300 million. I'll buy the best assets from my own bankruptcy for pennies on the dollar, and I'll build something better." From the ashes of Walter Energy, a new company rises: Warrior Met Coal. Today, that dead industry comeback story just invested $716 million that could change everything, and I just bought shares. This is the story of how bankruptcy become billions. It's 2:47 a.m. I can't sleep, so I am scrolling through stock screeners on my phone, looking for dividend growth opportunities. So I am filtering for companies with growing dividends for 5+ years, payout ratio under 60%, and actually profitable. After some time, this ticker pops up: HCC, Warrior Met Coal. My first thought, coal in 2025, but something caught my eyes. The 5-year dividend growth rate, 9.86%. Wait, hold on. Coal companies are supposed to be dying, cutting dividends, desperately trying to survive. They don't grow dividends consistently. So I do what any rational person does at 3 a.m. I'm starting downloading SEC filing. I see it: net income of $250.6 million in 2024, $250 million in profit from dead coal. That's when I realized everything I'd been told about coal was half the truth, and the half they weren't telling. So I dug deeper, and what I found was the Walt Scheller story, a bankruptcy that became a masterclass in vulture capitalism and contrarian investing. Here's what everyone gets wrong, and why Walt Scheller show opportunity where others show death. Most people think coal is one thing. It's not. Thermal coal. This is what gets burned in power plants for electricity, and yes, this is time. Solar, wind, natural gas, they are killing it. When the media say coal is dead, they are talking about this coal. But the another coal is metallurgical coal. This is the secret. This is what most nobody understand. You cannot make steel in a blast furnace without metallurgical coal. It's not about burning it for energy, it's about chemistry. When iron ore combined with carbon from coal, it gives us steel also produce carbon dioxide. There is no workaround at scale. Not yet. Maybe in 15 to 20 years with hydrogen technology, but not today. And here's the lesson: every skyscraper you see, steel. Every car on the road, steel. Those wind turbine everyone loves, made with massive amount of steel. The world need 1.9 billion tons of steel every year, and metallurgical coal is the only way to make most of it. This is what Walt showed in 2015. While everyone was running away from coal, he realized, wait, they are running from the wrong type of coal. Thermal coal was dying, but metallurgical coal, that had pricing power, that had inelastic demand, that had a future. So he bought the premium metallurgical coal mines from his own bankruptcy, the highest quality reserve in Alabama, paid pennies on the dollar. So what's the lesson? When everyone's running from an industry, sometimes they are running from the wrong part of it. If you learn one thing from this video, always separate the headline narrative from the economic reality. So Walt rebuilds. 2016, 17 and 18, Warrior Met Coal start producing, selling to steel manufacturers in Europe, Asia and South America. They can reach European steel manufacturers in 10 to 14 days, where Australian competitors 35 to 45 days across the Pacific. In commodities, speed is money. Faster delivery means better contracts, better pricing, and better margins. The companies start printing cash. They pay down debt. They start paying dividends, small at first but growing. But Walt isn't satisfied because he knows something about mining that most people don't understand. In mining, you are always racing against depletion. Every ton you pull out is one less ton in the ground. If you are not expanding, you are dying slowly. So in 2020, Walt makes a bet, a massive all-in-one bet. You find an untapped reserve called Blue Creek, premium quality metallurgical coal, an estimated 40-year mine life, one of the last major unmined reserve in the United States. And he start investing. At first $100 million, then $200 million, and after this $400 million. By February 2025, Warrior Met Coal has invested $716.5 million into Blue Creek. But here's the thing about mining projects. They take years to build. Underground mines, ventilation system, transportation infrastructure, and safety system. And during that time, you are burning cash with no return. Wall Street watches nervously. The stock price fluctuates. Some analysts say they are over-investing. This is risky. But Walt knows the numbers, and the numbers are insane. Alright, here are the actual numbers from their February 2025 investor update. Blue Creek project. So total invested capital is $716.5 million. Expected annual EBITDA $735 million. And expected annual free cash flow $637 million. So startup date is second quarter 2026. That's in 6 to 9 months. Why these numbers are extraordinary? When we divide $735 million by $716.5 million, it gives us 102.6%. So this is the return on invested capital. They'll generate more in annual EBITDA than the entire capital investment in 1 year. Now this isn't accounting profit. This is operating cash power before the usual mining risk. But as measure of project quality, it's exceptional. So currently Warrior Met Coal, their market cap $2.1 billion. Current annual FCF $100 to $200 million estimated. And production is 8 million tons per year. But after Blue Creek, production increased 75% to 14 million tons. Potentially FCF $750 million plus annually. And that's 35% plus free cash flow yield on current market cap. So what's the dividend math? Current dividend is $0.32 per share annually, which is 0.38% yield. Current payout ratio is 50% and current total payout $16.5 million. So if they add just half of that $637 million Blue Creek free cash flow to dividends, additional dividend capacity will be $318 million, which is potential for 10 to 20 times dividend growth over 3 to 5 years. That's where the speculative 14% yield on cost idea comes from, not a promise, a possibility. If you buy today and everything executes perfectly, your dividend yield on your original investment could reach that level by 2027 to 2028. So here we are, December 2025. Walt Scheller, the company he built from those ashes, is worth $2.1 billion today, and in 6 months, Blue Creek goes live. But here is one of two things which can be happen. If Blue Creek succeed, so what happens? Production ramps smoothly, free cash flow explodes, dividends start growing dramatically. Early investors make 3 to 5 times return. But what if Blue Creek struggles? Delay hit, cost overrun, or worse, a recession hit and met coal prices crash. So, I bought share, 5% of my portfolio, small enough that if I am wrong, I will shrug and move on. If you made it this far, you are different from 85% of viewers who already clicked away. So here's what I need you to do. Subscribe and turn on notification. Should you buy Warrior Met Coal? But I can tell you what questions to ask yourself. Do I understand commodity cycles? Can I handle this stock potentially dropping 30 to 40%? Am I willing to wait 2 to 3 years for this to play out? Do I believe steel demand continue through 2030? If you answered yes to all of this, maybe this story is worth investing. If you answered no to any of them, this isn't for you, and that's okay.